Bumble's IPO blowing past Wall Street expectations. The bank set price shares for the dating app at $43 a piece. The stock opening for trading at $76 a share and finishing the day up 63% from their IPO price, also up 5% pre-market this morning. So for more on this, we're joined by Seth Denson, co-founder and chief strategist at GDP Advisors. Seth, it's great to have you with us on this Friday. I know you are a big picture markets kind of guy, but I got to ask you about this Bumble offering. Are you bullish on it?
I am because of Whitney Wolfe Herd. I mean, this is the founder and creator of this app. This is an app that is focused on women interaction. If you look at the way that they generate revenue through in-app purchases primarily, women by and large are 80% statistically more likely to engage in in-app purchases. I think that they've structured their business well. Kristen, as you and I talk about all the time, I look at business fundamentals. You've got organizations like Blackstone, now private equity, backing this. I am a fan of this.
And Whitney Wolfe Herd, a self-made billionaire in her early 30s, also hailing from Texas down there in Austin as well. So it's interesting, though, one of the big takeaways, Seth, that we've seen so far when we talk about the IPOs is that these banks continue to underprice some of these offerings. DoorDash, Airbnb, Bumble, Snowflake. I mean, they soar, at least doubling in many cases these IPO prices. Any idea why there is that disconnect and why banks might be playing it safe in this IPO environment?
Yeah, this is nothing new. We saw this with Peloton and some of these others, right? And I think that the challenge is that let's go back maybe 2 or 3 years ago, and a lot of people got burned by these massive evaluations that were coming out. WeWork, perfect example, right, of where the evaluation was beforehand. So I think on the back end of 2020 into 2021, where the economy is, I think banks are just being a little bit bearish about the future of organizations and maybe playing it a little safe.
We got to talk to retail investor as well. The Seth taking on all sorts of stocks from GameStop and AMC to pot stocks, Dogecoin and Bitcoin. Of course, we do know federal probes are underway. Where do you fall on these pot stocks? Are these some stocks that you're bullish on?
You know, I don't know that I'm all that eager. I think that there's just too much volatility in the market with Reddit involvement and some of these other things that are going on. I'm a little cautious. Kristen, you know I'm a long-term player, not a short-term player in the market. Those are the things that I look at, so I'm a little cautious. Bitcoin intrigues me a little bit. I think that with obviously Tesla getting involved at $1.5 billion, the SEC is going to get involved in this. I've said all along I wasn't bullish on Bitcoin because of the lack of regulation. I'm not a big regulation guy, but I want some governance. With Tesla, not Elon Musk, but Tesla now investing in Bitcoin, you can sure bet that the SEC is going to get involved. And that's an okay thing, I think, for the long-term market, because you have to understand Tesla's now part of the S&P 500, which means if you own that index, you own Tesla, you own Bitcoin.
That's exactly right. Thank you for connecting those dots. Seth, the stock market at a record high, right at those levels. Long-term, what are your plays right now? What do you like and see opportunity in long-term?
Yeah, long term, I'm looking at the travel stocks. I'm looking at airlines. I know that a lot of people are a little skittish about that, but I'm looking at those because those are the things that have big upside, I think, as we reopen the economy and the vaccine gets rolled out. I was really impressed by Disney's earnings report. Disney is everywhere. And I mean, you know, you look at the parks and how much they were down 53% in revenue, but man, it's almost like Disney had a crystal ball to create Disney Plus just before the pandemic. I mean, how powerful was that? 95 million subscribers, and they're looking at an average revenue of over $5 per subscriber. Those are big dollars and big numbers. It's not just Mickey Mouse anymore.
Yes, Disney with those subscribers hitting close to 95 million on Disney Plus, I think certainly a benefit. But we do know it's going to take some time for that streaming service to turn profitable, Seth. Any concerns there that this could still be several years in the making?
The big concern that I have over the streaming service is just that there's competition. But listen, I can say this as a father of 3, 2 of which are big Disney princess fans. Disney's not going away in our household. And I think that that's the future. I think that we're going to start to see more streaming services. Certainly Disney with their Marvel, Star Wars, all of the different brands they have on that streaming service, they're creating their own content. I think they're a force to be reckoned with. So I do think long term they're going to be okay.
Okay, Seth, in 10 seconds, where do we go from here in the broad stock market?
I think we got a little bit more up in 21. We're going to see some money, some stimulus from Congress. And I'm a little skittish on 2022 when that starts to pull back, but I'm hopeful.
Hopeful. Okay, Seth Denson, thank you for being honest with us on timing here. Seth is a co-founder and chief strategist at GDP Advisors. Enjoy your Friday.